Hello everybody and welcome to a new video today, this time on Opendoor. And I hope it's not going to be too much of a rant style video, but I am not happy with Opendoor. I am not happy, and it's the first time that I say that actually about Opendoor. You may know that I've been very bullish on Opendoor. I was a extremely happy customer in the past, a believer in the mission. It's, just about 1% of my portfolio. I have quite a bit of money invested in this company, you know, in an absolute basis, and I'm not happy. I knew the contribution margin. I knew that they have a 14% contribution margin, and obviously you guess that if you're going to have a 14% contribution margin, it made sense when they were trying to get over the Q2 2022 cohort where they overpaid. But to me, it seems like they've gone from fair to shark, and they have doubled down on that contribution margin. And I think this could break the thesis. So let me just get started with the video. Title of the video is: Are they actually going from a shot at actually disrupting real estate in this country, a shot at actually disrupting the MLS, disrupting realtors, to just another home flipper? It's kind of the theme of the video. So I'm a two-time customer of Opendoor. I bought a house with them and I sold a house with them, and it was the best experience ever. Absolutely the best experience ever. Net promoter score for me was a 100. I recommend this to 100 of people. I was the biggest bull. And so, I had some I guess, random news on life. One of my tenants moved out, and I was like, okay, well, the stocks right now, I see a lot of opportunities, so I'm just gonna sell that house to buy more stock. And I was like, let me try Opendoor again. As I've said in prior videos, I've said my habit now, whenever I need to sell a house, if I need to sell a house, is gonna be to go through Opendoor. And by the way, I don't talk about real estate much on the channel. I consider rental real estate to be one of the mistakes of my youth. Along with selling Bitcoin at $250 a coin, or believing in dividend investing for like a few years. I've done mistakes in the past. I think rental real estate is a major mistake, just like believing in dividend investing. But anyway, slowly correcting this mistake. That's a house. Tenants moved out. Want to sell it. I want to sell it. In order to be able to put money in stocks. And anyways, just so you know, this is I'm not your first time home seller or your first time home buyer. I know my local market. When I tweeted that, somebody told me, "Oh, my guess is your realtor's wrong and Opendoor is right." I don't think so. I know my local market quite well, and my expectations are nowhere near my expectations from a year ago, and they're nowhere near my expectation from 6 months ago. I know full well my market. I know the comps. I know the direction of the market. I know fair value. This is a topic that I used to be very passionate about, real estate. So I know full well. I am not naive as to the value of the home if I want to sell it quickly. And if I wanted to sell this home quickly, right now, in my view, the going price would be 20% higher. In the worst case scenario, the realtor that I contacted actually gave me a number that was 30% higher. But realtors want to sell. It's just the way it is. My view, compared to my price that I think is fair, Opendoor gave me a lowball offer by an outstanding 20% below what I consider to be the fair value of the market. And I know full well the market right now. I see them all the time in my neighborhood. I know full well the houses that sell and the houses that don't. I know the season. These are all topics that I know. This is insane that they gave a 20% lower. I was expecting something like, in maybe not as fair as in the past, but still something somewhat fair. Even worse. Opendoor thought that it was wise to tack on repairs, I should have quotation mark here, repairs of $7,000 for a house which, by the way, newer build, pristine. This house is pristine, and they found it wise to add $7,000. None of which are going to be needed when I list next week the home with the regular realtors. In fact, I would go as far as to say that the repairs is perhaps upgrades that they want to make. They didn't need to do that at all. When I sold a house with Opendoor the last time, I sold a house which was arguably not as new and not as good as this house that I'm trying to sell, and they had tacked on only $1,700 of repairs to replace a garage door because I had a broken garage door. And that was fair. This time, nothing. This is absolutely not true. So this is insane to me. They are lowballing. This is a Sharky offer. You receive a Sharky offer for a company that I've personally spent more than 20 videos studying. I've listened to every single conference call. I've listened to podcasts. This is not good. This is not good. And this offer, this is to be contrasted with the fair 4% lower offer that I received from them in July 2021 on a similar house in terms of size, terms of neighborhood, everything was the same, just a little older of a house. Back then, I had received a 4% lower offer compared to the market, right? So 4% lower is fair compared to the bliss of the Opendoor experience. I am willing to lose $10,000 for the bliss of the Opendoor experience because it was that good. But 20%, you're not talking about $10,000 anymore, if that makes sense, right? So anyways, I am very sad to announce that I'm going to go through the traditional process again, and I am not looking forward to it. I don't want to do it. I don't have a choice. I have to get back into the rent-seeking system because the innovative company in the field seems to have given up. So I found a real estate agent, and I'm going to go through a traditional process again, like I've done before, and I can tell you it's not nearly as good. But it's worth $10,000 to go for Opendoor. Probably not worth that much. It's crazy. So in the past, it used to be sell your house for 4% below market value, pay a 5% fee. Today, it's sell your house with Opendoor for 20% below market value, pay a 5% fee, and get tacked on repairs that are absolutely not warranted. I am quite shocked by this. And this comes from someone who has loved and praised this company. Where is Eric Wu? Where is the vision? Is there still a vision? Right? Is the vision to make a 14% contribution margin? Is the vision to be just a home flipper? Is that the new vision? By the way, just so you know, if you're an investor in OfferPad, I tried OfferPad and they gave me 1% higher. But you see, I was expecting to be lowballed by OfferPad. I was not expected to be lowballed by Opendoor even more than OfferPad. You cannot scale Opendoor to the size of a business like Amazon if you are a Sharky buyer and do not pay closer to fair value. I fundamentally believe that. Dealing with Opendoor kind of felt like I was calling this company. You may see this company throughout the US. That's kind of how it felt. You expect to receive a bad offer from a home buyer like this. I didn't expect that Opendoor gave such Sharky offers. This is insulting. This is downright insulting. This is the point I was trying to make 2 minutes ago. Getting an offer that is 4% cheaper than the market on, say, a $300,000 house, which is actually slightly cheaper than your average house in the US. That leaves Opendoor $12,000 of gross profit. This makes everybody happy, in my view. This makes Opendoor happy. They make enough money to pay for their processes and have a little margin. This makes the seller happy. The seller is happy to pay $12,000 to avoid the hassle of having to go for real estate. I think that would be worth the cost. You lose 4%, you trim 4% of the selling price of your house, but you're avoiding the hassle, you're avoiding the uncertainty, you're avoiding the 3 months. I believe that is worth the cost. But 20% cheaper on a $300,000 house, that is $60,000 of gross profit. That is Sharky, that is lowball, and that is not fair, and that does not create a satisfied customer, and that does not create a repeat customer. When you do this, you do not create a repeat customer. The average American is going to be doing 7 real estate transactions throughout their life. That's the average American. You don't create a repeat customer even if the customer accepts that offer, because the only way a customer would accept that offer is that if they are in the time of distress, right? If they're in distress, there's a divorce or something like that, they'll accept the offer. That is literally the only way. So most reasonable people are not going to consider this offer. And since most reasonable people are not going to consider this offer, this is not a company that is going to have overwhelming success. You have overwhelming success if the average home buyer is pretty normally savvy. As far as savvy is not the savviest, but not the least savvy. They're pretty normal, reasonable folks. Normal, reasonable folks are not going to get lowballed 20% less than the value. Normal, reasonable folks, though, may accept 4% cheaper to not have to go through the traditional process. That they may, but this they won't. I don't believe it. And so the addressable market of a company is not monopoly-like market domination of real estate anymore if you offer 20%. No, the addressable market of a company, if you offer 20% cheaper, is this. That's the total addressable market. This is not the growth style of business that I want to be in, right? That's the total addressable market if you're going to be doing Sharky offers. The total addressable market, if you do fair offers, down the road, 10 years from now, would be insanely higher because they would have a shot at the disruption of the entire real estate market. And short-term profits right now is driving this company in the wrong direction, in my view. It's funny. I feel this today after I listened to a 1-hour talk from Peter Thiel today to try to always get back to the fundamentals, right? The fundamentals of how Silicon Valley business works and how the great companies of today have achieved their $1 trillion valuation. Peter Thiel is a wonderful, wonderful resource. It's kind of the main reason why I don't want to sell Palantir entirely, is Peter Thiel. And I can tell you right now, Opendoor is not following the playbook of leadership as set out by Peter Thiel and as set out by so many of the growth stocks that I cover on the channel, right? Opendoor is not offering a product that is an order of magnitude better when it does lowball offers like this, when it avoids satisfaction. It removes satisfaction. There's no more satisfaction. So anyways, here are my views. The company has avoided bankruptcy. We're good. The Q2 cohort is behind us. We're good. We now can stop lowballing our customers. I want Opendoor to focus on the future. My future for Opendoor is the future that we had 3 years ago. That is, you may remember, when Opendoor was entering a market, traditional agents were scared because they weren't getting any new listings. Because normal people who wanted to sell their houses realized the benefit of Opendoor. Fair offers get accepted to the point that Opendoor, traditional agents were running dry of profitable listings in many cities. You had videos on TikTok going viral talking about how they couldn't make a living because Opendoor was taking all of the houses. That's disruption right there. And all it takes is a fair offer to entirely disrupt your competition because you always have the best offer that is just enough for you to make money, to grow your monopoly, right? And still make money because you're deleting parts of the traditional process, which is what Opendoor was doing, deleting parts of a traditional process. right? The profit of Opendoor came from the deletion of different parts of a traditional process, like the search process, etc. It did not come from a Sharky margin, right? Opendoor had a shot, and it's still trying to do that, but they're going to have a hard time if they don't get any houses for sale. They had a shot at creating their own system, parallel to the MLS, that will eventually replace the MLS. It's tough if you don't have your own houses. Opendoor could, and this is what I want them to do, they could grow very quickly if only they were okay delaying profitability, right? That's what a company like Tesla is doing. If you look at Tesla, they keep dropping prices, they keep sacrificing profits, sacrificing margins now. Why do they do that? Because they know that when you sacrifice profits on your product, you are creating a monopoly in the process, right? When Opendoor comes in market and they give fair offers and they get the houses that the competition was thriving on, you're denying even the ability to do business for your competitors. That's why a company like Elon Musk, for example, Tesla is cutting the prices, so that if they cut the prices, the rest can't even compete. All right, this is how a lot of 21st century business is made. This is how it works. I believe a greater reward goes to those who think 10 years out. Charging 20% margin is not thinking 10 years out. It's thinking right now. So anyways, if only this company was willing to delay profitability in favor of growth. I do not want profits now. Profits kill product adoption. This reminds me, I saw today on Twitter some guy selling Palantir t-shirts. And on the Palantir t-shirts, it said Gap profitable with like a little party sign. And Palantir, if you follow a stock like Palantir, they weren't supposed to be Gap profitable until 2026. Nobody wanted that. I wanted growth in Palantir. I don't want profits now. I want growth. Anyways, profits are going to kill the adoption of this product. You are not going to have exponential adoption of Opendoor, which is my style of investing. I try to get into the service very early on and then get out when it's fully adopted. Well, if you do profits now, if you start rent seeking right away, you're not gonna get to adoption of your service if people who see your offer overwhelmingly say, too bad, I wanted to use Opendoor, but guess what? I'm gonna go with a traditional realtor process. And even worse is people who go for Opendoor are disappointed, and then they're gonna get the reputation. They're gonna be like, next time I'm not even gonna ask Opendoor for an offer. So profits should be mostly nominal in my view, or ornamental. I want adjusted EBITDA. Positive adjusted EBITDA is fine. Give me some positive free cash flow. I want to make sure the company doesn't go bankrupt. But that's enough. Just enough cash for you to not go bankrupt is what I look for in a stock. That's it. Enough cash for you to not go bankrupt. That's it. If Opendoor tries to profit from homes like any other home flipper, then it will never overtake the market. Never. To get adopted, this product needs to be much better than the competition. It needs to be much, 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 much better than the competition. And it's all about who do you think the competition is. Do you think the competition is realtors and the MLS, like I've always thought for Opendoor? Well, then this is not the right strategy. Now, if you think the competition for Opendoor is this, if this is the Opendoor competition, then that is probably a decent strategy, but I don't want to be in this stock. Because this is never going to be, a 100x stock if you're staying in this narrative, if that makes some sense. And of course, I'm in Opendoor because I'm looking for 100x opportunities. I'm not looking for a dividend or a buyback here. The bet is this company becomes a monopoly, or near monopoly, or something like a monopoly. They can't do that if they're not going to give, fair offers to their main product, and their main product is selling homes. And where do you get those homes? Since they don't build homes, they have to get the homes from sellers, and those sellers have to give fair offers. It is the beginning of a funnel for them. It is their funnel. So in conclusion, let me conclude, because I may have been a little bit harsh on Opendoor, but let me conclude this. I am still an owner of all of my Opendoor shares, and I like them very much. The numbers to me, if you look at their revenue growth and the direction and how it is plummeting, they clearly show that few sellers accept their offers. In my view, they've essentially stopped acquiring homes, and they are hibernating. And they are only buying homes from people who are literally in distress and desperate to buy homes. This was okay to do when the company was in deep trouble and Q2 was a problem. But Q2 is not a problem anymore. That cohort is gone. Right now, I would like to see three things. One of them is the return of innovation, if not the return of Eric Wu, frankly. He's the one who had the vision. He's the one who built the company. I was very inspired by so many of his early days in interviews. He had great interviews. He had a clear vision, a clear Amazon-like vision. The goal is to disrupt the MLS. The goal is to disrupt every single mom and pop realtor. The goal is not to become the next WeBuyUglyHouses.com. Okay? 2, now that we have the clear sign that cash flow is positive, that is enough. As long as cash flow positive the firm is, as long as we have adjusted EBITDA profitability, and I don't really care if you have to put a little more stock-based compensation to get there, as long as you have that, then in my view, they need to focus on the thesis. And the thesis is not to try to make money now. The thesis is to try to grow market share so that this company becomes a dominant company 10 years from now. That should be the focus. And lastly, I am worried about this approach of scattering. I don't know if you see what I mean. It's kind of the shotgun approach, where you're gonna shoot a shotgun and there's a bunch of tiny pellets in the sky, and then maybe one bird ends up getting a pellet. That's the shotgun or the scatter approach. I feel like that's the approach that they're having. They're having everybody go on the website, get offers, and they see if anybody bites. The problem is, for every seller that bites, you have 9 sellers, probably much more, or only they know this data, that get frustrated at this company and that are not going to recommend this company to their friends, that are not going to think about this company the next time they have to sell a house, and that are not going to hold this company in their heart like they used to in 2021. And the longer this goes on, the longer the lowballing goes on, the more their reputation is going to be hurt. That's all I have to say. Like the longer this goes on, the longer the reputation is going to be hurt. The company needs to get back to growth, in my view. It needs to get back to growth, in my view. And I am keeping my stock, not doing any stock moves or anything. But it would be good to see the return of innovation, please, because the thesis for me is very clear. And for any stock that I have on the channel, the thesis is the same. I want these stocks to grow to massive size such that they become monopolies or monopoly-like. And you do that not by taking major profits along the way, typically. Typically along the way, you need just enough profits to stay alive along the way. The profits will come much, much, much later. That's my view. Anyways, I hope you liked the video. I hope this gives you a little more information about the state of Opendoor right now. And I'll make another video when I sell my house with a traditional realtor, and I'll give you the real numbers, and we'll see what the lowball was like. It may have been more than 20%. We'll see. It may have been less too, but we'll see. Anyways, this was not investment advice. This is just entertainment. I appreciate your likes. I appreciate your subscribes. Thank you so much for watching, and have a wonderful day.